Hello and happy Thursday. Welcome to another Lunch and Learn with Purse Strings. All of what are we in March? We're talking about different ways to invest. And one way to invest is disability insurance, and that's kind of investing in that protection for your family. So we're going to dive into all of that today. For those of you who are new to Purse Strings, we're all about tips, tricks, pieces of advice on how to be financially fearless. And then when you're ready to buy some insurance, you need a will and a trust, you're planning for retirement, we have top tier financial professionals willing, ready, and able to serve you. We call those our Purse Strings approved professionals, and Terrell is one of them. So we're so excited to have you on today. Before we dive into our talk, do you want to give a little intro of who you are and what you do?
Absolutely. And thank you for having me today. So my name is Terrell Joyner. I work as a financial planner. Started in the retirement market and really specialized in pension planning, retirement planning. And then I realized folks needed a much more comprehensive plan versus just focusing on the retirement piece. That's essentially where my business transitioned into fee-based planning, where folks come to me, we build out a full financial plan, and then we essentially attack it based on the client's goals and priorities. So I also come into play with kind of the business hat because I have a business coaching practice as well. And so it's a little bit different when we work with our business owners, but similar conversations.
Awesome. Well, we are excited to have you on today and to talk about disability insurance, which is also so important for business owners as well. So let's just kind of dive in. If anyone has questions along the way, feel free to put them in the chat and we'll get to those. So kind of to get started, what is disability insurance? What is the main concept there?
Yeah, absolutely. So disability insurance, when we think about it, we essentially look at it as the foundation of a financial plan. And so another way of thinking about it is essentially paycheck protection. And so one of my comments to all my clients, no matter how well the financial plan looks, if we don't have income coming in, then the plan is essentially going nowhere. And so when that comes down to play, that's protecting our ability to work. And that is our most valuable asset, is the ability to work and bring in an income into the household. One of the comments on just I was looking up the results of Social Security benefits. And so there was in 2022, 1.8 million claims and only 550,000 approximately were actually approved through Social Security. So today's conversation is super important because most people think, oh, great, I have Social Security, I'm all set. This is where having individual coverage is super important.
Awesome. Yeah, definitely. Because if you're not having an income coming in, then that plan, if you didn't plan on that, then your plan is definitely skewed. So, what age, should you get disability insurance?
So we always say, if you think about disability insurance, it is very similar to home and auto insurance. We essentially hope we never will find ourselves in a situation where we actually need the coverage. But if we do, we want to make sure we have that protection. So there is a chance that we essentially may have a disability policy and never actually utilize it. So we could be paying for something we've never utilized. And so one of my clients said to me, they said, I hope this is the biggest waste of money that I ever spend. And that's great because you're making 100% of your income instead of a fraction of it. And so I always say as early as possible that we can get coverage in place is going to be super beneficial. And essentially, a lot of my folks, we kind of plant the seed with the kids. So as soon as they graduate college and they get into their career path, we say, hey, let's get the disability insurance in place as soon as possible.
Okay, interesting. Yeah. So it's not just when you have kids or, have a family to protect, but really it's just protecting yourself once you start bringing in that income.
Absolutely. Absolutely.
And so why is that so early? It seems kind of young almost.
Yeah, because there's a few factors that go into the cost of disability, and one of them is age. And so you have age and health are a major component when it comes to disability insurance, and then also your profession. So if you're a blue collar worker, your risk is a lot higher than if you're a white collar worker. So essentially, by getting it in at an early age, you can lock in a much lower price tag on the policy. The other component of that as well is also what we call pre-existing conditions.
Yeah.
So a pre-existing condition is essentially something where I have a prior ailment before getting disability coverage. And so the company can ultimately exclude that ailment. So, for example, I had a client who had a slip disc.
Mm.
And so it was a prior issue, a pre-existing condition. In that case, the disability had approved her for coverage, but they put on an exclusion to the policy stating that if she was disabled because of that same slip disc, they would not cover her. So
Mm.
when we have those young, energetic kids fresh out of college, this is when we want to kind of lock in that coverage. So we protect not only their health, but the price tag as well.
Yeah, definitely. I always love, yeah, once you know about it, they won't cover you for it. It's kind of that dichotomy. And so, yeah, getting them young while you're able, while you're still feeling good, get it at a much cheaper price.
Mhm.
Um, and so you pulled the stat in here, which I just think is interesting. It's catching my eye that women tend to pay lower rates for life insurance. And that's the same for disability insurance.
No, so a little bit different. So
Oh,
because
okay. I read that wrong.
yeah, no, that's great. And that's the people think of the same premise.
Yeah.
So females have a longer life expectancy in general, and all my clients say, well, that's because guys do dumb things sometimes.
Sometimes.
But essentially, females are more expensive when it comes to disability insurance, and essentially the reason being is just the younger years, the childbearing years, is a
Mm.
major component of the cost difference. The other reason for the price difference is essentially the higher claim rate and actually the longer claim period. So females statistically have higher claims and they stay out longer. So they essentially kind of take in more benefits from a disability policy than most males do. And that's again statistics. It's
Right.
similar to like long-term care insurance. So long-term care insurance is also more expensive if the company is doing sex distinct rates because females live longer in those
Mhm.
long-term care facilities. So essentially that benefit is paying out for a longer period of time.
Interesting. Yeah, that the long-term care makes a lot of sense because, more years and those are expensive years. But for disability, it's interesting that they either, it seems like take longer to get back to work or it takes longer to recover, whatever those different things are. So that's interesting to kind of know about and know that there's another paying tax on disability insurance as well.
Yeah, and there's a cool thing. I was looking at an article that also looked at the rates over time.
Hmm.
Even though females are actually more expensive when they first sign up, over time, the male rates actually increase a lot faster than females do. So
Interesting.
it's basically the stats are showing that females have higher disability risk early
Hmm.
on and less later on, and vice versa for the opposite for men, where less risk in the younger years, much higher risk ultimately the older they get. There was
That makes sense.
another cool study I was looking at, an article I was reading about just the demographic change in different industries that women are coming in and they're saying we're here, we're flooding it. And the study was showing from 1980 to 2010 over a 30-year period, female physicians, the number of female physicians increased by almost 450% over that time frame.
Wow.
So it's the stats are also changing. So the more
Hmm.
that females are moving into different industries, the companies have to look at different analyses in order to start to price properly. Because again, we've been so used to men do this, women do that, and now it's changing where women saying absolutely not, we can do a lot more.
Right, right. That's so interesting. And yeah, it really changes of like who you're hiring and the work that you kind of have them do, are they going to get hurt or what's that rate there? That's really interesting. Um, and so I know there's short-term disability and then long-term disability, correct?
Correct.
And what are kind of those differences there?
Yeah, so we always get that question, should I have both? Do I need both? Should I really just focus on one over the other? And it really depends on where you're at in life and where you're at in your career and what safety nets you have on your personal side. And so we'll kind of break down the components of a disability policy. So you essentially have what's called an elimination period. An elimination period can also be called a waiting period. It's the amount of time that you ultimately have to wait or satisfy before your disability actually kicks in. So with short-term disability, it's a much shorter period. So it could be as low as 0 days where your
Mm,
disability kicks in right away, or it could be as late as 30 days. So depending
mm,
on the company you're working with or the type of policy. So short-term benefit period, so for short-term disability, the benefit period could be as short as 30 days or it could be as long as a year. So it depends again if you're doing individual versus group coverage.
got it.
Um, Same idea with long-term disability. Usually you have a longer waiting period or elimination period. Most common is 90 days, but that can be all the way up to a full year as a waiting period. So everybody's different as to what makes sense for them. The long-term disability could also pay up to all the way to age 65 or age 67, depending on that policy. Now, most common that you would be exposed to is work policies. So,
Mhm.
short term disability usually covers you for the first 3 months. After that 3 months, your long term kicks in. So, because you have that short term paired with the long term, there's really not much of a waiting period except for what is due on the short term side.
Okay. And so that long term can last a long term. Are you kind of saying, let's say you got injured at 40 and it was a kind of a forever recovery, you could get income till 65?
Correct. And so essentially, there's some caveats to these policies that
Of
we have
course, of
to
course.
be mindful
Nothing's
of.
cut and dry. Talk to a professional.
Exactly. So essentially, if you are permanently disabled, cannot
Mm,
do any gainful employment, then yes, it would pay you all the way up to age 65. But if you are able to do some type of gainful employment, many companies, even Social Security, would expect you to go back to work
right.
to some extent. And so essentially, it depends on knowing the terms of that policy and how much it will protect you in that time frame.
Yeah. I mean, but that's still some solid coverage that, it's that risk and reward. Could you imagine not having income for the rest of your life? Well, now that you have this protection, I mean, that's amazing. That's life changing.
Absolutely. And especially with some of my young folks, they'll say, hey, I'm not concerned about disability. I know you told me to get it in place. So let's just do the long term and I'll save up money for any short term issues. And then you also have folks in professions that might be able to accumulate sick time. So if I'm able to
Mhm.
accumulate a significant amount of sick time, then I can potentially use my sick time for any short term disability. Now, the
Um,
risk you might run is you have successive disabilities where, all right, we just used 10 days and then we use another 10 and now we've exhausted it. And if we needed coverage, now we have no sick days. So there is that risk. And then, especially for my young female clients, if they're planning on kids, short term makes sense. So, and this
yeah.
is a funny fact. So, pregnancy is considered a disability. And so, there's for certain companies that cover short term, it's either an illness or an injury. And so pregnancy is considered an illness, which is just, it's a funny conversation that some of my younger clients always have. They're
Yeah.
like, well, yeah, you have a foreign body growing in you. So yeah, I could see that.
I mean, yeah, it's the only time they kind of consider it and bring it in. So that's awesome that they do, because
Yeah,
it is a lot on a body. And of course, that can easily knock you out of work.
absolutely. And it's super important to protect moms in these scenarios and making sure that, I mean, they have income coming in so they can stay home a little bit longer than,
Yeah.
especially if they're with an employer that doesn't provide any paid leave for
Yeah.
maternity leave. And obviously that's different depending on where you're working. And then the other piece of the short term is essentially sometimes you may not need it depending on the state that you live in,
Hmm.
because a lot of states have rolled out family leave acts,
Oh, yeah.
things like that. So essentially, you might be already paying for a short term disability policy through the state. So I cover a lot of clients in Connecticut and Massachusetts. And in Massachusetts, in particular, they have the Family Leave Act, and that actually comes out of an individual's payroll. And so
Mhm.
if they do have a short term disability, they can apply with the state. So in their case, if they have that coverage, they may not actually sign up for their own short term. They may leverage the state plan and then just focus on the long term side of things.
Interesting. And yeah, I love how like specifically for those states. And so, you there's no reason to pay twice, for something you're only going to get once. And so to know that different information is so essential, from state to state and different things like that.
Absolutely. Absolutely.
And so I know we kind of talked about, there's a group policy and then what, like an individual policy?
Correct.
And what are kind of those differences? I mean, besides one's in a group.
Exactly. So group policies are essentially most of the time provided by your employer. And so your employer essentially says, I'm covering all employees that work for me full time, and you'll get, let's just call it 60% of your pay if you become disabled. So some things to be mindful of. Clients always come to me saying, I'm all set. I don't need disability. My employer has it. And so this is where the education comes into play. So they know the risks that they're putting themselves in this situation. When it's with the employer, it isn't always what we call portable, meaning if you leave that employer, you cannot take that coverage with you. So if you get fired, leave your job, what have you, you ultimately now no longer have coverage. And the risk is you go to a new employer and they don't offer that same coverage. And now you don't have that protection. The other piece of this puzzle, and so some companies will offer what we call supplemental coverage, where you can buy up and above what the employer is covering. So you
Okay.
can call it buy an additional 20% to get you a higher benefit. In those situations, a lot of times those are also not portable, meaning you can't take those with you.
Right.
But the benefit is essentially because the employer is paying for your benefit, they're ultimately taking a tax write-off for it. So because they're taking a tax write-off, if you become disabled, that benefit becomes taxable to you. So we always say, yeah, your employer might be providing you coverage, but if you actually become disabled, you're only collecting, call it 45, 50% of your income.
Right.
It's going to be enough to cover the household bills. In most cases, it's a no.
Right.
With that supplemental coverage, on the other hand, you're paying for that. So essentially, if that benefit comes to you, you get that benefit tax-free. So perfect example, I have a client, unfortunately, had to go through liver transplant and recovery. And so he's been out already 3 months, looking at another 3 months. And he's collecting a paycheck. It's a fraction of what he would if he was working. But ultimately, they're still taking out taxes because a portion of that was the employer paid coverage, but he also did sign up for that supplemental. So he has some coverage that's coming in that will essentially be tax free to him as well. That's the difference. Sorry, that's the difference with individual policies, where if you take those out, those are your policies. You paid for it with post-tax dollars. There are some cases where you can do pre-tax, but if you paid for the policy with post-tax dollars, that benefit would be tax-free to you. And that also speaks to that portability piece, where if I sign up for an individual policy and I leave my employer and I go to a new one, that policy carries with me. So there's a
Right.
big benefit of having that individual policy.
Yeah, that's huge. I mean, especially when you talk about, yeah, I'm covered by my employer, but if it's 60% and then they take the taxes, you do lose a lot of money. I mean, you still get some, but it's still, not enough to keep up. Usually 40% is not enough to keep up your family's income or price of living. And so, yeah, it's really great to either get that supplemental or just that individual coverage.
Absolutely.
And so, how does disability insurance kind of come into play then if you're a business owner, where you just have to get that, individually?
Yeah, absolutely. So and I'll take a step back also on the
Yeah.
individual policies. There's some extra caveats that really come into place. And so when you're purchasing a disability policy, one of the key things you want to look for is called non-cancelable. Non-cancelable means the company cannot cancel your policy on you, nor can they actually raise your premiums. So that means your premium is going to be locked in for the life of your policy. A lot of those group benefits are age-based, meaning every time you hit that 30-year-old, 40-year-old, 50-year-old, your price will potentially increase over time. Not always the case, but sometimes they are age banded. So when it comes to that individual policy, it's super beneficial, especially for a business owner. And again, business income coming in, if you're not working and there's a lack of income no longer coming into the business, it's important that you're protecting your family. But there's another caveat saying, what if I have 15 employees?
Mm.
And if I'm disabled, the business is not running. What happens? Is there money coming to the business that can maybe hire somebody in the short term to replace me, to get some of that work done? Can I hire an outside consultant to take over during that time frame? And so there's what we call business overhead insurance, where essentially that I can buy a specific policy that the business essentially owns. And so, because the business owns, the business is also the recipient of those funds. So, I would be protected as the insured. The business would own the policy and they would also pay for the policy. So, if I'm out, then the business would be able to collect on that policy to help kind of mitigate those losses of dollars or revenue that's being produced from me as a business owner. And that
Interesting.
and that works the same with, if let's just say we have a key employee, our top salesperson is bringing in 50% of our sales. What happens if that person is disabled?
Yeah.
Now, as a business, we're like, holy crap, we just lost 50% of our revenue because our employee is out on disability. Having a key person insurance, we always think about these things when it comes to life insurance, not
Hmm.
always thinking about it when it comes to disability. So when we have that key person insurance, that disability policy on that key employee, if something were to happen to them, we can still bring in revenue into the business while we try to foster new salespeople, replacement, training, what have you. So ultimately, the business can collect some income on that level.
I had no idea that was a thing. But it makes so much sense, if you do have that key employee, or if you're a very small business, and you lose a third of your company right there with one person being out, that's huge.
Yeah.
So yeah, having that protection really does seem essential for the business owner, besides just your own paycheck and family, but for the business itself.
Yeah, absolutely. And then it kind of brings us back to that conversation of group insurance. So if I'm an
Yeah.
employer, I look like I'm great. I'm taking care of my employees. I'm offering you group disability insurance. And as an employer, it is fairly inexpensive depending on the population. So again, depending on my demographic of employees, the industry that I'm in, all of that's going to come into the makeup of what that cost will be for that coverage. But it's a much more inexpensive way of offering benefits to employees,
Hmm.
and it's a tax write-off. So there's
Hmm.
the flip side of what we say of the employee, hey, be cautious and be careful with the group benefit, but also as the employer, why not offer the group benefit? Because it offers this extra layer of protection to your employees. You want to make sure their well-being is taken care of, God forbid if something were to happen, so you know
Right.
their families are taken care of if they were to become disabled.
Right. And even, if you had an employee who didn't purchase their own benefits, 40% of your income is still something that you can really provide, which is again better than nothing, but we know a zero really just brings you down.
Yeah.
So that, it's still super helpful.
Absolutely. And there's another caveat to be mindful on the employee side when it comes to that group disability coverage, is a lot of them have limits on the amount of benefit that they will
Mm,
pay out. And so short term will have a weekly maximum, and long term will ultimately have a monthly maximum. And
mm,
so with those maximums, it's important to know, where do you fall income level? Are you going to actually hit that? The
mm,
other piece to be mindful of is, many times bonuses do not actually qualify for disability income. So it's just on your base pay. So it's important to know, you have outside income with the
mhm.
employer, again, from your base pay, that may not be covered. That's where those individual policies come into play to go really right on top of that group benefit. I love group benefits. They're inexpensive, and especially
Mhm.
from an employee perspective, hey, that covers, to your point, that 40% of what
Yeah.
we need. I only have to pay for a small difference. Great. I can put that money into my retirement plan. I can put it towards a life insurance policy. There's a lot more that I can essentially do with my cash flow because of that group benefit.
Yeah. That's definitely something to know, kind of what your coverage is if you're like a salesperson or something like that, where you have a base plus commission, and if they're only covering part of the base, that's important information to know. And so I think really from this conversation, it's like we have to look at what that coverage is.
Mhm.
It's not like, yes, I have it. It's yes, what does it cover you for? Because as we know, it could be, for just a little bit, or it could be for everything. It just depends, short term, long term. You have to understand your policy.
100%. And if there's questions, we can certainly tackle questions. But if not, I'll dive into a little bit more of some additional features that you might be entitled to when you actually look on the individual side of disability coverage.
Yeah, we just have a comment here that's saying, this is especially important for women, especially single moms who are starting their own business, because you got a lot to cover there.
Absolutely, absolutely. And I mean, we've had clients who have signed up for an individual policy when they were working for an employer, and then
Hmm.
they started their own business. And so it
Yep.
carried over to the business, and it's
Right.
locked in at the rate that they had originally signed up for.
So is
Uh,
that typically then, if I signed up today, it's kind of this price, locked in if they said that um, till I retire?
Yep. And again, you want to make sure that you know the terms. It depends on the
Of course.
company that you're working with. That key term is the non-cancelable, essentially locked in those premiums and they won't go
Yeah.
up over time. But there are companies that don't have that non-cancelable feature. And so essentially that means your policy can increase over time. So it's
Mm.
important to make sure you pay attention to that. Some are built into their policies. It's automatic. Others, you actually have to pay a little bit additional in order to get that feature.
Now, I know everything's a flux of depending on who you are and your age and your income and these different things. But let's say like you're in your 30s and you're healthy. Are these plans, would you say like $20 a month or like $200 a month or like $700 a month? Just so we can start getting a range of like what this might look like to take out of your paycheck. I know it's always, variable.
Yep. And so again, remember the factors are going to be your age, it's
Hmm.
going to be your sex, it's going to be your profession, and also in some cases could be your education level. So the more
Mm.
education you have, the actual cheaper the policy will be, simply because the way they look at it is if you are disabled here for a manual job, you can go get a desk job because you're highly educated. So you're
Yep.
less of a risk to the company. So I'll give you an example. I have a 22-year-old. She's signing up for coverage and her policy we're looking at like $36 a month. Then
Awesome.
I have a business owner. He runs a physical therapy practice. He's in his 30s. For him, larger income. Again, business owner. So we're
Mhm.
looking. I think it was like just shy of $200 a month.
Okay.
So it depends on the income level and again that age. So
Yeah.
some folks we have seen policies where um, larger income levels starting say 40s. So I think we were protecting an income level of like 250,000, and so essentially their policy was around $600 a month. So
Hmm.
a little bit different, older, and
Yeah.
so it depends on where you're at and also the profession. So remember that profession piece. That's why it's hard to kind of give you the range
Right. But
when it comes to it.
those are great examples to show when you're younger how much cheaper that is. I mean, $30 a month, even if you're just paying that for years, it's so much cheaper than paying, 600 a month. But also, if you put that money aside and something did happen, chances are you wouldn't have saved enough that would equal the amount of what your coverage is.
Absolutely.
Yeah.
These amount to around anywhere from like 1 to 5% of your actual income level. So it's a minor fee for
Yeah.
what you're actually protecting. And there's been like so many calculations that show, hey, if you're disabled for a year or 2 years, you've recouped your money and then some.
Right.
Obviously, again, we don't want to be disabled. We want to make 100% of our pay versus only a fraction of it. But that
Yeah.
protection is there. We always tell people it's either a no decision is a decision. So if you're deciding, hey, I'm not going to pull the trigger this year, maybe next year, you're agreeing to self-insure yourself.
Yeah.
That's the risk that you essentially run.
I love that. Yeah. If you're not saying yes to the insurance and you're saying yes to self-insuring yourself, or, that risk. And
Exactly.
so, with our couple minutes left, what other benefits did you say or other items could be tacked on?
Yeah, absolutely. So when you're looking at the individual policies, there's additional riders that you can add to a base policy. So one of the most popular, and I really highly recommend, is what's called like an extended partial, a residual rider. Essentially, they're named differently depending on the company that you're going through. But how this rider essentially works is that it means that you do not have to be 100% disabled to collect on your disability
Mm.
policy. So it allows you to collect, again, a residual benefit or a partial benefit. So again, the calculation is not perfectly easy, but just for simplistic purposes, if I'm making, let's just say I went out on disability and my doctor says, hey, go back on light duty, I want you half time.
Right.
I'm making 50% of my income, I can still potentially collect 50% of my disability benefit. So I can
Wow.
still be collecting some income while filing the claim on the disability policy. So that's to me is it's just That's more common as a partial
Yeah.
disability than an actual full disability. So to me,
What
it's that one's super important.
what is considered like a full disability? Is that just no working for a certain amount of time? Like you just can't be there at all?
Yeah, so the companies actually leverage your doctor. So if
Mm,
your doctor says that you cannot do the duties that are required of you by your job, your doctor is the one that's basically saying that you're disabled.
got
The
it.
company does have the right to say we would like a second opinion. So they
Hmm.
can't say, hey, you have a wishy-washy doctor. We've worked with this doctor before.
Right.
So
There's always one.
there is always one out there. So essentially, the companies do have the right to go back and say, hey, we would like a second opinion to just prove that this is a real disability. But it really
Yeah.
relies on the doctor saying that you cannot do your duties. So I'll give you a perfect example. Shortly after COVID, one of my clients, she was a teacher, she actually got MS. And so
Mm,
after being diagnosed with MS, the doctor said that you can work, but we want you on light duty. The
right.
school that she worked for would not accommodate for that position. So she was ultimately out of work. So she was able to claim on that policy. And so she claimed through COVID. And then I think, was it last year? Last fall we met, and she was actually in the midst of going back to school, but as an aide and not a teacher. And so because she had that extended partial rider on her policy, she didn't have to just stop collecting disability when she went back to work. It was based on her original income. And so now that she's making a fraction of that income, she is still able to actually collect on her policy.
Good for her. I'm
So
glad that worked out. That's really great.
yeah, you don't want to hear those stories, but it's lovely when you know you have the coverage and the protection.
Yeah, I mean, it's way better than, turning out that you don't have any money and you have to go to work and you're sick. I mean, this is really protection all the way around for you, for that better life.
Absolutely. Absolutely.
Yeah. Awesome. Are there any other writers you wanted to mention or anything else that we didn't touch on today that you want to make sure is shared?
Yeah, absolutely. So there's a few, and I'll try to be quick on these ones. There's
No
one
rush.
called the own occupation rider. So essentially, if I'm disabled, I'm out of work, out for an extended period of time, but I can go do a desk job elsewhere, I will be expected to go back to work. And many of these policies have that as a caveat on the actual policy they're selling you. And so let's just say, and each company is going to be different. It could be you can be out on disability for 2 years, 5 years, and then you're expected to go back to work.
Hmm.
And then again, that and residual benefit is super important. But essentially, if I have what's called an own occupation rider, it protects my occupation. This is very popular with our physicians, our dentists, our highly specialized individuals. So
Right.
if a physician becomes disabled, they have this own occupation rider attached to that. Let's just say something happens with their hands. Again, that's the big risk factor. So if something happens with their hands, they can't go back to practice, but they're intelligent, they're highly educated, they can go do a desk job elsewhere. This piece says, no, we're going to still pay you based on that occupation. You cannot do that specific occupation. So we will continue to pay your benefits regardless of what you ultimately decide to do outside of work in general. So
That's
it's
really great, especially when you spend so much on like specific schooling and different things like a dentist or a doctor, where it's like, you can't take that niche skill anywhere else. I paid so much for that.
exactly, exactly. So those are super important, especially for those specialized positions. When it comes to non-specialized, it's a little bit hard to say you can't do that particular job because there could be aspects of the job that you can do to get back to that same income level.
Hmm.
The other two riders I want to kind of hit on is the student loan rider and the retirement rider. So student loan rider essentially says, if I become disabled, the company can pick up a portion of my student loan payments.
Wow.
Essentially, I'm not stuck with now I can't afford my student loan because I'm only getting a fraction of my pay and I'm only just meeting ends meet. And ultimately, now my student loans are accumulating over time just simply because I can't afford to keep up with it. This rider will essentially pay a set amount to my student loans while I'm out on disability.
Wow. That's game changer.
Big time.
Yeah. Especially if yeah, that's a big one.
And especially for private loans more in
Hmm.
particular, because there are some benefits of the federal piece where if I
Right.
am disabled, I could get some forgiveness because of that. Again,
Right.
not to get into
There's more leniency.
exactly.
Yeah.
And then the other piece is the retirement protection. So retire guard. Again, they're all called a little bit differently, but they're pretty similar across the board. Same exact way. So if I'm disabled, I'm ultimately not paying into a retirement plan anymore. And
Hmm.
so if I'm out for 2-3 years on disability, that's a significant hit to my retirement account, which
Hmm.
means that now I might have to add those years on to the end of my career, which who wants to add those on if you don't have to? So
Right.
having this retirement protection essentially says, again, the company will pay X dollars into your retirement fund while you're out on disability.
Wow. Yeah, that's a ton of great protection. Yeah, I mean, that way all your goals are still just getting hit. Cause like we said, if there's no income, your plan is screwed. And
Exactly.
so if you have this where it's like, but my retirement's being funded, my student loans are being paid, all these different things, I'm still getting my income. That's a game changer.
Absolutely. And now, playing devil's advocate, it
Yeah,
can get very costly with
of
disability
course.
insurance. So we have to always weigh what is important to you, what are the risks to you, which risks are you willing to take on, and which ones are you not. All insurance is it's basically taking away some type of risk out of your picture. So you
Right.
always have to take a moment to say, how much risk am I willing to take and how much am I not willing to take? Because we also don't want to be stuck eating ramen noodles just because we have all of the right insurance in place. So it's
Exactly.
a delicate balance of, hey, let's make sure we can still live life, but God forbid something happens, let's make sure that we have that protection that we need in place.
Right. And that's why, we're like, talk to a professional, because it is these, do you have kids? What's your story? If you have a ton of money in your retirement already, maybe those 2 years isn't as big, but something else is a fluke. And so it's just like you have to have these conversations because everyone's situation is so unique. From the coverage you have at work to any coverage, anyone you need to cover. So it's so important to talk to professionals because we can see that there's so many different ways to go about this.
Absolutely. And honestly, personally, I've learned so much just because of being in the industry.
Oh,
Had I
I
not
bet.
been in the industry, I would have been clueless as to the need for coverage. And it's super common. We're young and invincible. We never can picture ourselves being disabled. But one in four 25-year-olds will actually be disabled longer than 6 months by the age of 65. So it is a real risk, and it's a higher risk than actually dying. So
Yeah.
but we're quicker to talk the life insurance conversation because it is inevitable at some point
Right.
versus disability thinking, oh, that will never happen to me. It's a very similar conversation that we have when it comes to long-term care. Long-term
Hmm.
care is a big risk. And so we want to make sure we protect it. But none of us want to think about us needing long-term care because not being able to do those 5 daily living activities. And who wants to think about not being able to do those activities?
Right. Right. Yeah. I mean, it makes sense though. 6 months, getting a 6 month stint between now and 65, chances are something will happen. That makes sense. So yeah, we got to be covered, and that's why we bring you on. That's why we want you to share this knowledge, because it's so important. Especially for women. I know we're juggling so many things, so it's kind of like why this as well. And I think this conversation with all your great examples has really shown it really is essential to that plan, to that foundation, to keep that plan in place.
Absolutely. And especially for our female market, because again, the premiums are higher because there's a higher claim rate and a higher
Yeah.
time out. So it just shows the importance, especially as these women, female entrepreneurs come out and these women really embrace these industries and break open that ceiling that has been there for so long. Make
Yeah.
sure that we're protected and we're not putting ourselves in a very risky position as you continue to climb the ladder. Because if you become disabled, we want to get back on our feet and keep climbing as quickly as we can. We don't want to be so far behind. Now that changes the trajectory of where our career was actually going.
Right. Right. Yeah.
Foundation, as we always say.
I love it. I love it. Well, thank you, Terrell, for coming on and sharing your expertise today. If anyone has more questions, you can always reach out to Terrell. His email, forgot, wasn't going through the bottom before, but now it is tjoyner@financialguide.com. He's also one of our Purse Strings approved professionals, so you can reach out to him off our site, pursestrings.co. And yeah, let's get insured.
Awesome. Thank you for having me, Maggie. I appreciate it. And thank you for what you do to support the female community.
Thank you, Terrell. Great having you on today. We'll talk to you soon.
Take care.
Bye.